Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, June 14th, 2019. We are now in the last hour of the trading day and the last hour of the trading week. So it's been a really great week trading for us. I hope you've done well. As you know, I am primarily a end of day trader, which means that I prefer to make all of my buying and selling decisions near the very close of the market. I feel like those prices are the most valid prices of the day, and therefore those are the prices that I make my entry and exit decisions on. So, all right, let me just make sure we're up and running here and everybody can hear me. Let's take a look. Hey Andy, how you doing? Nice to see you. Thanks for showing up. Hey, happy Friday to you, my friend. Hope you're doing well. So, all right. Well, let's take a real quick look at the markets here. So the Dow's down 7, the Nasdaq's down 35. So the Nasdaq's down a bit more than the other indexes, and the S&P is down 4. So as far as the Dow and the S&P, kind of break even days, the Nasdaq is down a bit more today. So all right, so the format for today's show is, first of all, we're going to go ahead, we're going to run the legal disclaimer, get that out of the way. Then the next thing we're going to do is we're going to come back, we're going to take a look at all of my current positions. I'm going to go through when I bought them, why I bought them, and how I'm going to manage them going forward. And then after that, we are going to go down through my watch list and we're going to analyze each stock. We're going to take a look at the technicals, look at resistance and support, possible triggers, and then we're going to, if there's anything good at the end of the day that sets up, I'll go ahead and make that purchase near the very close of the market. And then after that, after the market closes, if anyone has any questions about anything I've discussed, or if you'd like me to take a look at any particular stocks that you're interested in, I'd be very happy to give you my opinion on the technical situation with those stocks. So that is the plan. So if you could just hang on and I will be right back. Just need to play the legal disclaimer, about 40 seconds. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All righty, got that out of the way. So first of all, let's just go through my current positions and we'll take a look and see when I bought them, why I bought them, how I'm going to manage them moving forward. All right, so Apple. I did buy Apple back here on the 7th of June. I bought it when we had a nice strong close above the 200-day moving average. My stop, if I was wrong, would be a close right back below the 200-day, giving me a small stop loss area. And then I have been phasing all the way out. My initial target on this was a 70 RSI. So currently, since I've purchased it, you can see we've been phasing out. I think I hit 2 profit targets here, 1 here, another one there. I'm out of about 60% of the initial purchases that I sold. So my plan on this was I was waiting for the first day that it closed below the previous low. So you can see this day here didn't quite close below this. Yesterday didn't quite close below the day before. Looks like today, although it is rallying, if it does close above yesterday's close, I will go ahead and keep this. But if it does close under yesterday's low, I'm just going to go ahead, lock in the profits on the trade, call it a good trade, and be happy that I was able to phase out of a large majority of my shares up in this higher level. That's, I'm a big fan of phasing out. I like to take something when the market gives me something every day, not all of it, not the entire position, but a portion, so that if it does turn around on us like it kind of has today, you have at least gotten rid of some of your position at higher levels. So I'm not saying it's the only way. I know a lot of great traders that do not phase out, and there's pluses and minuses. If it goes up strong and then crashes back down, then you're better to phase. If it just goes and keeps going and going and going and going, then it's better to have a full position. But I feel like at the end of the day, it's all going to wash out at the end of the year. There's pluses and minuses, and you really have to choose a methodology that fits your personality. And taking partial profits on the way up fits my personality, so that's why I do it. All right. Hey, Mount Doji, happy Friday. Hey, Dr. Jorgensen, Apple, nice rebound after down opening. Yep. So anyway, we've got some decisions to make on Apple, not with this trade. If this closes below, my initial plan was to get out after it closed below the previous day's low, and that's what I'll do. But there's a possibility of entering a new type of trade in Apple, but we're going to have to weigh the pros and cons. So as we get further into the live stream, we can discuss that. But as of this trade, if we close below yesterday's low, I will be exiting Apple for a nice trade. All right, DDM. I did buy DDM, which is the double leverage Dow Jones Industrial ETF. I did buy this back on the 6th of June when we had a nice strong close back above the 200. My 200 was my initial stop. No, I take that back. It's always going to be my stock. This is a discretionary trade. So owning the DDM above the 200-day and selling below, if you back test this, it's a nice, profitable, quantified approach to trading the DDM. Apple was a discretionary trade. So I can make discretionary decisions based upon what the price action does. But DDM, the plan on DDM initially was buy this above the 200-day, phase out as it goes my way. If it keeps going up, phase out, phase out, phase out until I run out of shares, or to the downside if it closes below the 200-day. So I like to vary up my trading approaches. I like some to be discretionary. I like some to be trend oriented, where I'm not getting in there and making small changes to the position. I just look at it big picture. So I like to have a balance, big picture, small picture. I like to sell puts. We have the SPY overnight trade that we'll discuss in a minute here. But in addition to having a nice mix of stocks in different industries, not having too much correlation in your holdings, I like to have the same approach with my trading. So this particular trade is a trend trading trade. You can see I have phased out of a nice amount all the way up to here. It has started to move sideways. I did get one profit target yesterday also. So, I'm out of a large majority of these shares, so it makes it easier to hold these going forward. So the idea is close below the 200, get out. If it continues to move up, continue to phase out, continue to phase out, continue to phase out until I'm out of shares, or I've hit my profit target up here, which is a 70 RSI. So DDM was red most of the day. It's gone green, so that's good. All right. So this is an interesting trade. This is Ford. Now, if you were on the podcast yesterday, the plan of this was, I like the trade. I like the big, strong move up. I like that we took out a fractal. Fractal is when you have a high with two lower highs to the left, two lower highs to the right. And it did trigger that fractal. It was above all the major moving averages. MACD was getting close to crossing. So I like this trade. I do like this trade. The only thing is that we have this big, large bar, and buying big, large bars concerns me a little bit because I feel like I'm chasing. But in the big picture, I like the trade. So whenever I'm confronted with that kind of situation, what I do is I buy a half a position, because if it keeps going, I want to have some. But my experience tells me with these kind of bars, a lot of the time, not all the time, but a lot of the time, they will backfill a little bit and test the halfway of the previous big bar. And you can see that's exactly what it did today. So I took a half position here yesterday at 10:03. Intraday, I went ahead and added my second position at 9.97. So now I have my full position. I got a better price than buying it at the high yesterday. It could have took off and I would have only had a half position, but I still would have been happy with that. So now I have my full position. You know, you don't want to average down, but in this particular case, it was the intent of the trade was to average down. And it's not like I took a full position and it went against me and I went, dang it, I need to add more, right? That is truly averaging down. I took a half position and the intent of the trade was if it does come back, I will add my other half. So it was part of the plan. So anyway, so now we have the full position in Ford, did get a little bit better price and, reduced my average cost on the trade. So going forward, we're at a 54.33 RSI. My initial profit target is going to be up here at 70 RSI level, way up there. As it moves up, I will continue to phase out. Currently, you have to ask yourself, where are you going? If this goes down, where are you going to be wrong on this trade? Well, the halfway mark of this bar is right about here. So probably the 5-day moving average, a close below the 5-day or a close below the 10 and the 20. Obviously, if you use the 5, you're going to have a little less loss. But on the other hand, if you're using the 5 and the 20, now you have two major, longer moving averages that are dovetailing right together. So actually, probably I'll use the 5, the 10 and the 20, a close below the 10 and the 20 as my initial stop. That will place me below the halfway mark. And I like that the two are going right there together, so they're going to add a little bit more support there. So anyway, that is the plan with Ford. All right, 5. Now, most of my trades, I base them off daily bars, but on this particular trade, I base them off the weekly bar. So this is going to be a longer term trade. But the pattern that I really like here, I learned this from Kerry Lavorne. He's a really good trader, really good teacher. He's trading partners and business partners with Dr. Alexander Elder. And I worked with him one-on-one for over a year. And this is his favorite pattern. He calls it a squeeze play. But what we have here is we have a previous high. We come back down into the value zone, which is between the two green lines. That's the 1 ATR channel and the -1 ATR channel. The price action comes up into an uptrend, takes out that previous high, makes a higher high. Then it comes back, which is normal and to be expected, back into the value zone. This is where I want to look for an entry, but just because it gets there doesn't mean I just take it. But it comes into the value zone, starts to move sidewards, indecisive, but it's showing that it's running out of sellers. Then last week, it stabbed down, washed out these previous lows, but immediately rallied back, showing that there were no more sellers that were interested in selling down in this area. Now, it did not close above the previous day's bar. This is day 1, day 2. This is a V1. Could have been a V1. If we go day 1, day 2 goes below day 1. If it were to have closed above day 1, that would have been a valid V1. But it did not. So I did not take the trade. But then this week, Now it morphs into a V2. V2 has 3 bars. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 goes above week 1. Sorry, this is a weekly chart. Week 1's close. So I did buy intra-week. I did not wait for the close. I bought intra-week here at 129.55. And so what I'm targeting now is I'm targeting this previous high up here. If this week we close below the trigger was the close of week 1, I would initially get out. If this holds, which it looks like it is going to hold, then I will hold this trade until I get a close below the washout bar, which is right here. So this has been a nice trade so far. Here it's shown on the daily. It's up about 2.5% since we bought it, so it's been a nice trade. So this is going to be a longer term one. You can see we're closing in on one of my first profit targets. So in addition to trading daily, sometimes it's nice to add a little diversity too and trade weekly bars if something really good comes along. But this is a great example of a nice up move, normal pullback, move sideways, spike down, reverse and trigger with the V1 or a V2. So I hope that makes sense. Okay. QQQs. I did buy the QQQs back on the 4th of June when we had this nice, beautiful close above the 200. In addition to closing above the 200, we also had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. So buying the QQQs over the 250-day moving average and keeping it while it's over the 250-day moving average and getting out when it closes under the 250-day moving average is a great back-tested approach. I show you the results on etfreplay.com, but it's staggering. It makes a nice percentage return, but if you're wrong, it keeps your drawdown small. So just by the very fact that it closed back above the 250, that is a legitimate trade. But in addition to that, we have the V2 trigger, and in addition to that, we had the close below the third ATR channel and the close back above the third ATR channel. So in this particular case, because all these signals happen here, I took a full position. Normally, if I have a V bottom, a lower low, and a V bottom, I'll take a half position. But because I had those other accompanying triggers and setups, I went ahead and took a full position, and you can see this has been a great trade. It's moved nice, strongly the entire way. This is a trend trading trade, so I'm not going to mess with this if it loses a moving average. I'm just holding this until I either phase out, until I'm out of shares, or I close back below here. So I know it seems crazy to let it come back all the way to here, but again, I'm out of about 70% of my position here. So it's been a really, really nice trade, and so that's the plan. SPY. We did buy SPY down here on the 3rd of June, and just to show you why, intraday we were under 30 RSI. Intraday we were under the third ATR channel, and at the close of the day, we not only closed back above 30, but we also closed back above the third ATR channel, showing that the market was signaling that sellers were not interested in buying down here anymore. You can see this is a great, wonderful trade. We phased out, I think, right to about here, or was it there? Now I can't remember. Somewhere in this range. I know that. It was a really, really nice trade. Now, in addition to that trade, we're not in that trade anymore, but in addition to closes below, closes back above the 200, other signals, I do trade the SPY every day, and I buy the shares at the end of the day and I sell them in the morning. And why do I do that? Well, it's based upon this study from Bespoke Invest on Twitter. But since 1993, if you would have bought the SPY on the open and sold it at the close, so you held it during the day, you would have actually lost 5.2%. But if you did the opposite and you bought on the close, bought at the end of the market, and then sold it first thing in the morning, you would have actually returned 568%. So buying in the morning, selling in the afternoon, you would have lost 5.2% since 1993. Buying in the afternoon, selling in the morning, you would have made 568%, meaning more than all performance came in after hours trading. It's pretty amazing, right? The prices are bid up in the after hours and in the pre-market, and they're sold into in the market. This is what these numbers are telling you. This was based to 2017. Some more recent numbers, as of January 19th, instead of 5.2%, minus 13.9%, and the one where you buy in the afternoon, sell in the morning, instead of 568%, 634%. And Stephen Burns, at S. Joseph Burns, he did a recent study up to date in 2019, and his numbers, instead of 634, come to 712.63%. So anyway, it's a great back-tested method. I do this every day. I'm taking the long view on this. You can see the red is the buying in the morning, selling in the afternoon. The green is the buying in the afternoon, selling in the morning. And so this is a very powerful back-tested approach that has its up and downs. So you have to be careful. You always have to position size correctly so that if you do run into a drawdown, it's not going to hurt your account. But take the long view like I do, and over the years, this might work out well. It has worked out well for me, I can tell you that. I've been using it since the end of February, and definitely profitable, no doubt about it. Okay, so that is SPY, and so I will be buying that. Oh, I should say I bought it yesterday at 289.13, and I sold it at 289.26. So made a very, very small gain on that today, but certainly better than a loss, right? And I will be buying that today. All right, USO. I did buy USO yesterday, and why did I buy it? Well, as with some of the other trades that I've shown you before, I like when the price goes below the third ATR channel, below the 30, and then closes back above the 30 ATR channel and closes back above the 30. And that's exactly what oil did yesterday. I didn't like the price action at the end of the day when it gapped up and then closed much lower, but at least I got the lower price. It is up today slightly. You can see it almost did hit one of my profit targets. So moving forward, if it continues to move up here, I will continue to phase out. The 50 RSI is my initial target. This is not a trend trade. This is a discretionary trade. I'm just looking for a bounce in a downtrend. I don't think this is the bottom of the market. I'm just looking for a bounce in a downtrend. To the downside, if we lose the 30 RSI, if we lose the third ATR channel, I will go ahead and just exit this for a small loss. But that's the plan with oil. All right. All right, here's MasterCard. I don't usually take a lot of short positions. I've only taken 2 short positions since I've started this live stream. I just generally don't trade short side, but every once in a while, I get a compelling setup, and I did go ahead and short MasterCard back here on the 10th of June. And why did I do it? Well, we had 2 signals that I like. Just like we like to buy under 30, back over 30, under the third ATR channel, back over the third ATR channel. Here we were over the third ATR channel and we went under. We hit 70 RSI, we went under. So I did go ahead and initiate a short position on MasterCard. You can see it's moved down since then. The day before I hit 2, or the day after the position, I locked in 2 profit targets here and here. I locked in another profit target here yesterday, and my first profit target here on MasterCard is right here for today. I don't know if I'm going to get it. The blue line here is the 50 RSI. In this short position, we should find some resistance at the 50 RSI. So if it comes down here, closes below the 50, I'll continue to keep it. If it comes down here, tests the 50, closes back above, that will be my signal to get out of my short position. And also, if we close above the previous day's high, that will also be my signal to just lock in profits on this. But this has been a nice short, as you can see. Dr. Jorgensen says, market is like a lady. Take it when you can because tomorrow will be gone. Yeah, I think there might be some truth to that. Hey, Steve Burns is here. Good to see you, Steve. Steve says, another good week in the books. Nice bounce today. The market held up well in the range. Yes, it looked a little uglier earlier on today, but it's looking decent. You know, it's able to move up a little bit off of its lows, so that's always positive. Thanks, Steve, for coming by today. I always appreciate it, my friend. If people don't know who Steve Burns is, he's an amazing author, amazing trader, educator. His Twitter account is at @sjosephburns, and he's got a great website, newtraderu.com, and he's got such great information on there. You're doing yourself a disfavor if you don't subscribe to him on Twitter and read all his articles. It's a wealth of information. So thank you, Steve. Thanks so much for saying hi, and thanks for all you do from all of us. Okay, so that is the plan for today as far as with my current position. So the market did go. We are having a green day, which is nice. Should knock on wood because we don't know if it's going to stay a green day. But we've had 9 out of 10 profitable days, so that's been a pretty good run. Listen, before we start getting to my positions, not my positions, but before we start going through my watch list, I wanted to show you, I like to show you little quotes from famous traders because they're famous, successful traders, and it's probably a good idea to listen when they have advice for us. But this is Steve Clark. He was mentioned in Market Wizards, Jack Schwager's Market Wizards book. And this is a simplistic statement, but really, when you distill it down, it's true. Do more of what works and less of what doesn't. Right? But some people just have a better go of it when they're trading dip buys. Some people want to become breakout buyers, but they're really not good at it. But for some reason, they feel like they want to be a breakout buyer. I think this is sage wisdom. Do more of what works and less of what doesn't. Focus on the type of trades that you seem to do better at. And who knows why you're doing better at them. Maybe it's a psychological makeup. Maybe it's just something internal in you that those type of trades tend to jive more with your personality. It's hard to explain why, but the point is it doesn't really matter. Do more of what works and less of what doesn't. So, if you're a good dip buyer, you seem to have good experience with dip buying, do more of that. If you are not doing well with breakout buys or some other type of trades, maybe do a little less. So anyway, I thought it was interesting. When I first read it, it did resonate with me. And so I did want to share that with you today. Excuse me. All right, let's go through my watch list now and see if there's anything interesting for the rest of the day. All right, so Apple. So as we discussed before, I did buy this over the 200. My plan after it started to extend away from the 200 or the 200-day moving average was to sell it when we had a close below the previous day's low. It does look like that is going to be the case, although not 100%. So let me see the low here, 193.60. All right, let me put my little guiding line right there. So if we do close below 193.60 today, I will go ahead and just lock this profit in. Now, currently, I'm considering entering a new position on Apple, and the position I'm considering entering is based upon a 1050 EMA crossover. It happened yesterday, but I did not like it. I think if you were here, you'll remember I did not like the trade because it was at the third ATR channel, and we'd had several days of testing this third ATR channel. It's been rejecting. So once I get in the trade, I'm going to trade this mechanically, but I do have a little bit of a filter on which crossover trades I get into. And so I didn't take it because it was at the third ATR channel, and 88 to 92% of all prices stay within the plus third ATR channel and the minus third ATR channel. Sometimes they poke their head out, sometimes they go below, but in general. So my idea here was I wanted to see, similar to Ford, if I could get a pullback and then enter the trade at a better level, giving me a better entry price, giving me a better risk to reward all around. Well, it did turn out that way. Apple did go down. Obviously, if I would have bought it down here during the day today, that would have been a good entry point, but I kind of like to wait till the end of the day. Now we have the 200-day underneath us. So, this is a tough one. I could see if I could wait one more day, get a little better price, get a close below the 200, back over the 200, in addition of being underneath the crossover. It's a tough one. We're at 5740 RSI. MACD is positive, so everything is fine that way. We did have some volume coming in yesterday off of this third ATR channel to the downside, which I didn't quite like. I'm just going to have to wait and see what the volume is today. But I'm considering this. But even if I do take it today, like I said, I do get a 0.43% discount to where I would have bought it yesterday if that had happened. So let's just monitor that till the end of the day, and I'll make a end of the day decision. All right, so Amazon. So I did buy Amazon back here on the 6th of June. It immediately rocketed up. On this particular day, I phased out of all my positions, so I am flat Amazon. It has basically just moved sideways since then. Now, Amazon also has a interesting buy signal today, and it is based upon the 550 simple moving average. This is a good back-tested approach when the 5 crosses back over the 50. Let me show you quickly here over on etfreplay.com, and I do use this by permission from etfreplay.com. I just want to mention that. So this is the 550 simple moving average, and so you can see since January 2000, the approach of staying in when the 5's above the 50 and getting out when the 5's below the 50 return 1,777.6%. Buy and hold did return more, 2,245.2%. The drawdown on Amazon using this approach was 66.9, and the drawdown of buy and hold was 93.3. So, it's good. It's not as good as some of the other back-tested approaches, but, it is a decent entry. It is a decent entry signal, and you can see it does back test well. So I am considering possibly buying Amazon. So here we have Apple with the crossover, Amazon with the crossover. So I'm not going to buy both. I'm very cognitive about correlation in my accounts. I don't really like to have more than 2 particular tech stocks, and because I feel like Amazon and Apple are pretty much going to move the same way. So this one did bounce off the 50-day moving average, so it seems a little stronger to me than Apple. On the other hand, you have Apple close to the 200-day, but I don't like this gap so much. So I would have to say if I had to pick between either of them, I would probably err on the side of Amazon. For one, it's up today, and Apple is down. So, the market's telling you that there's some relative strength in Amazon compared to Apple. So anyway, I'll have to make a game time decision at the end of the day, see what's happening there. But those really are my two, the two that I'm really going to have to decide on what I want to do at the end of the day. All right, so Boeing, not much going on with Boeing. Alibaba did reject the 200-day. It's now moved down. It's lost a 50 RSI. For me to get interested in Alibaba, I'd like to see a V1 or V2 entry, maybe to get me back in the trade, but nothing here today. Caterpillar has a nice V2. I don't like it because it's close up here to the second ATR channel, so it seems a little high for me to buy. RSI is fine, but as far as where it's positioned compared to the second ATR channel, I don't like that. My favorite type of momentum trades come within the V1, the 1 ATR channel and the -1 ATR channel, right here in the mean of the charts. So nothing on Caterpillar today. Canopy Growth. I did buy Canopy Growth back here on the 11th of June when it tested the 200-day, closed back above. My initial stop would be a close back below the 200. The next day it went way below, but then closed back above, keeping me in the trade. And then yesterday it did finally close below the 200, giving me out of the trade. So, that was a loss, but we can take a little something away from this, in that it was good that we got out of the trade when we were supposed to. If we would have hung on and said, oh, I think it will go back up, and then you get another 1.6% punch in the face, it's not fun. So the takeaway to this is, make your plan and then follow your plan, what happens. Sometimes it might go racing up, and that's just too bad. But more times than not, I think you're going to see that it continues the wrong way. Cisco, big strong day down today, is holding the 50 RSI. The bar is larger than 1 ATR. The distance of 1 ATR is from here to here, here to here, here to here. So the range of this bar now is larger than 1 ATR, meaning that it's larger than the expected range of noise. So this concerns me a little bit. Nothing on Cisco for me today. Delta Airlines had that nice breakout, and then today it's moved back, so nothing there. DDM, I still do have DDM, so we'll be continuing to hold that. Dow Jones Industrial, moving sideways. Disney, so I did buy Disney. Here's a good example of a V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. It was inside the channel, which I like. It did reject the channel the previous day and then closed back above. This was a great trade. We rallied all the way to here. We ran out of shares right here, moved back down. I was looking for some kind of setup here to get back long, but it took off without me. So anyway, good trade on Disney from here up to here, but didn't get this second leg. Etsy. Oh, just give me a second. All right, so Etsy had a nice move up. Did not trade this one, but today it's moved down pretty strongly. Ford, we talked about Ford, so I am currently long. I added my second half of my position here intraday. The 10 and the 20 right here, that's going to be my initial stop. As it moves up, I'll just continue to phase out if it moves up. Facebook strong today. Yep. 53 RSI has the 50 and the 1 ATR channel above it, so I don't think I would be interested in Facebook here today. 5 below, we do have that based upon the weekly, so we will continue to hold this one. Gold had big, strong move up, tested the high and failed. So nothing on gold. I actually did buy gold back here on May 30th when we took out this fractal. This is the high with two lower highs to the left, two lower highs to the right. We had a MACD, positive MACD crossover. We had the 5 cross over the 20 EMA. So we went long right here and phased out all the way up to here. So it was a beautiful trade. Flat gold at the moment. Right now, I'd probably have to have some kind of pullback here, maybe back down to at least a 20-day moving average. Okay, Google is down a little bit today. Nothing really on Google that interests me right now. Goldman Sachs. Goldman Sachs did have a higher low V2 here. I would like it a little bit more if it closed also above the 50, but you know, this would be possible. I mean, it is a legitimate, sorry, not V2, V1. It is a legitimate V1. I don't like this big bar in the recent past though, so I'm just gonna let that one go. IBB, nothing on IBB today. Intel, well, this was a really good trade for us. Got into Intel right here back on the 29th of May. The previous day was under the 30 RSI. The previous day was under the third ATR channel. The next day it closed above the third ATR channel, closed above the 30 RSI, and we just rode it here all the way up to here. It was a great trade. We phased out all the way and got flat right up here, very near the top. So nothing on, it was a great trade, but we are flat Intel at the moment. IWM, I considered buying IWM yesterday because it closed above the 200-day and it came from a lower high, and MACD was positive, and this back test fine. I added one little filter. I wanted to see the price close above the fractal. Here was the high with two lower highs to the left, two lower highs to the right. So I was just waiting for this to close above the fractal to give me a little bit more confirmation. And you can see it did close above the 200, but it didn't close above the fractal. So I decided to just pass on this, and this is down a little, or this is down under the 200-day. So going forward, I would probably wait until we got to close back above the 200 again and above that particular fractal. So nothing for me right this moment on IWM. Coca-Cola had a nice move up. I don't have anything in Coca-Cola right now. Lockheed Martin did take a nice trade, as you can see on Lockheed Martin back here on the 29th of May. It's a nice V1 formation. So here's day one, here's day two. Day two washes out day one and then closes back above day one. Then it closed above the 10-day, it closed above the 50 RSI, and you can see that just moved up nicely. And we phased out from here up to about here. So it was a wonderful trade. Not in the trade anymore. We're flat. Going forward, I just don't see anything right here that I'd be interested in buying. There's our MasterCard. Our MasterCard short was up earlier, but it's come back down. So we're short, so that's good. Just give me a second here. Merck. Haven't had anything in Merck. I haven't had any positions in Merck, but that's been a nice trade. Microsoft. Nice move up there, but moving sideways. Nothing, no setups that I can see at the moment. Netflix. Well, this is somewhat interesting. You know, we talk about double bottoms and bullish divergences. Well, you know, here we make a bottom. You can see the depth of the MACD bars here, how deep they are. Then we have this real nice rally. Now we've given it all the way back. You can see the MACD bars now are down, but they're not as deep as the previous low. But then again, these bars are not as low as this. So in a general sense, it's somewhat interesting because we're starting to get this divergence here. But what I'd really like to see is I'd like to see a test of this low, at least intraday, and then a close under and then close back over the 200. That would be a good approach to entering a position in Netflix. So nothing on Netflix for me today. Nike had a big strong move up, just moving sidewards, nothing there. Philip Morris, well, this is one of the positions where the previous day was under 30. It was under the third ATR channel. Next day it closed back above the third ATR channel, closed back above the 30. I did buy it here back on the 7th of June. Next day immediately went against. Next day it went immediately back up. And then it just started to move sidewards. I didn't like the sidewards movement. You know, when you enter a position with good setup, it really should move your way fairly soon. The best trades are the ones that move your way immediately. And it was just hanging around down here. I didn't like it, so I ended up just going ahead and selling it. Not because it hit my stop. I just didn't like the price action of what was happening. So, you know, took a small loss in Philip Morris, which is fine. I'd like to see this go under the 30, back over the 30 to, you know, for another possible entry. PayPal, nice strong move up here, but nothing of interest for me now. QLD, nothing of interest there. QQQs, we have this. It's been a nice move up, little sideways move down. This is a trend trading trade. So if we close back under the 200, I'll get out, or I'll just continue to phase as we move up until I run out of shares. Silver, boy, had a big strong move over the 200 intraday, but then it closed down below. Is a V1 to the downside, right? Here's day one. Day two washes out day one to the upside and then reverses. And it does look pretty likely that it's going to close below day one's close. So it doesn't mean I'm going to get short here, but I just, from a teaching perspective, I just did want to point out that V1s and V2s work both to the upside and to the downside. All right, SPY. I will be buying SPY today on my overnight trade. At the end of the day. Square. So listen, this is a good example of a double bottom and divergence, a really nice one. Here you have a low. See how deep the MACD bars are? Then you have a rally. Then you make a lower low. Even though we're lower than the previous low, you see how shallow the bars are? So this gives you a good potential setup. Doesn't mean buy, but it means it's starting to look kind of good, but then you need a trigger. Well, my trigger was several triggers. We made a V2. Here's day one, day two, day three. Day two goes below day one. Day three closes above day one. That is a legitimate V2. And we also close back up into the previous range, meaning that this little stab down here was a false breakout to the downside. So we had a V2, we closed back in the range, we closed back into the channel. So I bought here back on the 4th of June and rode this baby, phased out all the way up to here and ran out of shares to sell. But that was a wonderful trade. From top to bottom there was over 14%. AT&T, well, you know, we had this big, huge bar down. It's like 2 ATRs long. We've attempted to rally, but nothing on AT&T. Bonds up a little today, but nothing there. Tesla, I almost bought Tesla here, and just to show you, I did not buy this, but again, just to show you, we went under 30 to over 30 RSI. We went under the third ATR channel, over 30. We had a V2, day one, day two, day three. Day two washes out day one. Day three closes above day one. I didn't buy it because it got stuck right at the 10-day moving average. So I decided just to pass. So this is one that got away and it ended up nicely. All right, so natural gas. I do like natural gas today, and I'll tell you why. Yesterday we were close to a 30 RSI, and we're under the third ATR channel. Today we've closed back into the ATR channel. We've created a V2. See, here's day one, day two, day three. Day two washes out day one. Day three has to close above day one's close, but right now it looks pretty close. Looks likely it's going to happen, and it did come from a higher low situation. We are far under the 200-day moving average. So my rule, my filter is when we are under the 200-day moving average like that, unless I have like a ton of indicators line up. So I will go ahead and buy this today based upon the higher low, the under the third ATR channel, and the V2 entry. But I will be buying only a half position. Oil we have, so it is still up today since our purchase yesterday, so that's good. The dollar, big, strong day today. You can see that, right? I kind of hate to chase this. It seems a little chasey to me. Moved a little bit too strongly. So, maybe if it comes back down here, test one of these upwards moving average with the V1, V2, that might be something. Visa, nothing there. The VIX, I was possibly going to buy the VIX yesterday on this V2, the close over the previous day's low there, but you can see it tested it intraday and then closed below. So I did not go ahead and take it. It did trigger a V2 intraday, but it's closing back below. So nothing on VIX. Verizon. Well, I gotta say, Verizon does not look bad to me. And see the high here with the two lower highs to the left, the two lower highs to the right. So this is a fractal. Today looks like we're going to close above the fractal. We're still within the channel, the -1 ATR channel. We have broken out of this range. We have broken out of the fractal. MACD is positive. RSI is only 55.78. So this looks pretty good to me. I am going to go ahead and take a regular full position on Verizon at the end of the day. Energy, nothing there. Financials, nothing there. Real estate broke out to a new high, but it's a 67 RSI. So, all right, so let's consolidate here and see what we're looking at. Remember, I was looking possibly for an entry in Apple. Based upon the 1050 EMA cross. Well, this is just one of those things where you're going to have to make a decision, but I am going to get out of my discretionary trade because it does look like it's going to close, at least right now, under 190.360. So I will be getting out of that. Whether I'm going to be entering the 1050 EMA cross on Apple, I think I'm going to go with the Amazon trade instead of the Apple trade. One, because it's up today and Apple's down, is holding that 50 RS, is holding the 50 day moving average as well. But really the reason why is that Amazon is up and Apple is down. So I will be buying a full position of Amazon today. My initial close will be, a stop will be when the 5 SMA closes back below the 50 SMA. So this is a trend trade. Remember that, right? So this is not really a discretionary trade. This is a trend trade. So that being said, I am going to go with the Amazon position based upon the 550 cross. I do have to watch Apple as far as getting out of my current position in Apple. Forward, we're fine. I do like UNG, and I do like Verizon. So what do we have? About 5 minutes. All right, so I'm going to go ahead, because I'm going to run into a lot of things here at the end. So I'm going to go ahead and lock in the trade on Apple. That was a nice trade. Thank you very much. So I'm gonna go
Order
flat
filled.
apple.
Order filled.
All right. So apple is taken care of. UNG. I'm gonna go ahead and I'm gonna buy UNG, which is natural gas. And this is going to be a 1/2 position.
Order partially filled.
All right.
Order filled.
I trade several accounts, so I have to do this repeatedly, so hang with me.
Order partially filled.
2044.
Order filled.
And if you have any questions about what I'm doing, just hold them until the end of the day here, and then I will get to them when the market closes here. All right. All right, so we got out of Apple. Did add UNG. All right. I'm going to go ahead and add my Verizon. This is a full position, 10% position size.
Order partially filled. Order filled. Order partially filled.
5842.
Order filled.
Okay, so we sold our Apple. Bought our UNG. Bought our Verizon. I'm going to go ahead and buy the SPY now. Ooh, I better hustle. I can make that Amazon trade.
Order partially filled. Order filled. Order partially filled.
289.32.
Order filled.
All right, and then so Amazon did go negative now. All right.
Order filled.
This is going to be right down to the wire.
Order filled.
1817, 1870, 17. 1870, 17. Okay. And then our SPY position, forgot now, 289.32.
Order cancelled.
All right.
Order cancelled.
All right. So we did end up getting out of Apple. So that was a really nice trade. Thank you, Apple. We did get into Amazon here at 1870.17. We did get into natural gas here at 2044. Entered Verizon here at 58.42. So yeah, let's see. So slightly down on the day today. We were up earlier. I guess I shouldn't have jinxed it by saying it, but that's fine. So let's see. Listen, if anyone has any questions, now would be the time. Before we get into the answers, though, let me just let you know that I do offer private one-on-one teaching and coaching lessons in the evening time via Skype. So if that's of interest to you and you like to do some one-on-one work with me as far as trading, please let me know. My email and my hourly rates are in the description of this video. There is a real benefit to working one-on-one with someone. I'll just give you an example. Stephen Burns, I read all of his books, right? I understand his methodology. Dr. Alexander Elder, I read all of his books. But
order canceled.
I didn't quite put it all together until I started working with them one-on-one privately in one-on-one lessons. That's when it really came together. So there really is an advantage to doing some one-on-one work with a teacher or a mentor. So again, if that's of interest to you, please let me know. It usually starts with the phone call. It's a free phone call. We just get to know each other a little bit better. But I want to fully understand, how you're trading, what approaches you've been using, what challenges you have, so I can sit down and create something for you that will fit your personality and, of course, using good trading principles. And lastly, if you like this video, if you like this live stream or my channel, please subscribe. Please hit the thumbs up button. It helps grow the channel. So anyway, that is it on my little plug session. So let's see if anyone has any questions. So Dr. Jorgensen says, wheat is suffering. Come on, guys, help out. Yep. Everyone should quit DirecTV and switch to Verizon. That would help the stock also. That's a good idea, Bruce. Oh, I mean switch from T-Mobile and Sprint. Yes. Dr. Jorgensen says, don't forget SPY. I did not. I did buy it. Biden wouldn't like you. He and Warren are after Amazon. Okay. Well, sorry, Mr. Biden. Mount Doji says, I was on the phone. Well, did you notice that I did buy Verizon today, Mount Doji? Mount Doji says, can you give me a summary of what you picked up? Yes, I will. I did buy Amazon, Mount Doji, today at the end of the market because of the quantified profitable back test on Amazon of the 5 SMA closing back over the 50 SMA. So this is a trend following trade. You can see it did cross, the 5 did cross over the 50 on a closing basis. So I did go ahead and enter Amazon today. So that was the first trade. The second trade, well, the other trade, I did lock in my profits on Apple because it closed below the previous day's low. UNG, I did buy UNG today because we formed a V2 back up into the third ATR channel. So a V2 is where you have 3 bars involved, day 1, day 2, day 3. Day 2 washes out day 1, and day 3 closes above day 1. Now, in addition to a nice V2, it was also a higher low V2, and it was a higher low V2 that closed back up into the third ATR channel. So that is why I bought UNG, and it was under the 200-day moving average, so I did only take a half position. And then the other position I added here as well, Mount Doji, was Verizon. You and I have been watching Verizon for a while, and I was saying it either has to go lower or it has to go higher. But today we did close above the previous fractal. Here's the fractal back here. Here's the high with 2 lower highs to the left, 2 lower highs to the right. and we did close above it. We broke out of that range. We're still within the 1 and -1 ATR channel. So I like when we're in this area, in this value zone. MACD is positive and it was on pretty strong volume. So that is why I bought Verizon. So we got out of Apple, we added Amazon with the 550 crossover. I added UNG because of the higher low V2 break back into the third ATR channel, and then Verizon. Then of course we bought our SPY, and we got out of Apple and added our Amazon. So that's what we've got. Thanks, Dr. Jorgensen. I will have a good hike. Have a good golfing day as well. Mount Doji, we've had our eyes on Verizon for a couple of days. Yeah, I remember that. So we have been watching it. We were kind of watching to see if it would go up or if it would go down. So, yep. So we ended up with Amazon. We still have DDM. We still have our forward position, our 5 position, small amount of Qs, our overnight SPY position, UNG, and oil and Verizon, and our short on MasterCard. So I think we're pretty well diversified in our positions. We're not too strong in any one particular area. We have some trend trades. We have some discretionary trades. We have our overnight trades. And we do have a bit of a short trade as well. So it was a really, really great trading week. We'll see what happens over the weekend. Hope there's no bad news out there from a geopolitical standpoint. You never know. But it's been a very good week, and I hope everyone's learning. Andy says, can't even spell fractals. Well, I think you spelled it right. Going to read up over the weekend. Thanks for all your good and enthusiastic advice, Greg. Don't know how you squeeze it all into 1 hour. You know what, Andy? Sometimes I don't know how I do it either. To be honest with you, that hour flies by like I cannot believe. And, teaching, trading a couple accounts, trying to verbalize everything that's in my head. I'll tell you what. I will tell you one thing, though, and this might be some good advice for everyone. What I really like about doing this live stream is it forces me to go through each chart and speak out loud about it. If I wasn't doing this live stream, I would just zip through the charts. Zoop! But because I do the live stream and I want to teach you guys, I have to verbalize everything. And I think I actually take more information in from each chart because I have to talk about it. And a friend asked me, since you've been doing the live stream, do you think you're trading worse? You're trading better or worse? And I said, there's some pluses and minuses to it, but all in all, I think I trade better because 1, I really follow my rules, right? Because I have to set a good example. 2, I have to verbalize each chart more than I would if I was just doing it in my head. And, when you teach something, you understand it better where you actually have to verbalize it. And thirdly, it's really nice to have a video diary of my trading day. I mean, I would recommend, guys, that the possibility of you having your own little YouTube channel. You don't have to broadcast it. You can just record yourself basically doing what I'm doing. It's important to keep a diary of your trading, write it down, all this kind of stuff. But if you do it here on YouTube like this, you actually have a video diary of your every day. I mean, I can go back and look at any day in the last 3.5 months or however long I've been doing this. So it's pretty cool. But yes, that was a long way of saying, I don't know how I squeezed it into 1 hour either, but it seems like I've been doing it okay. All right. Does anyone else have any other questions? So where did we end up? I guess we ended up down. Yeah, we ended up down 17 on the Dow, 40 on the NAS, and 4.66 on the S&P. So not too surprising. We have the weekend coming up. All this geopolitical stuff. So, all right. Well, if no one has any other questions today, then I'm going to call it the day, call it the week. And hope everyone has a really good upcoming weekend. Stay safe. Go out, do something nice for somebody today. Just a smile, a wave, hold the door open. Just try to add a little bit of positivity in this, in the days that we have right now, which, people are just so, sometimes, man. I just don't know. I think we need some positivity going on, make this world a little better place. So with that said, have a good weekend, and if you have any other questions over the weekend, you're welcome to email them to me or send them, message them me on Twitter. So on the way out here, I have to play the legal disclaimer, and that'll be that for the week. Thanks again for tuning in. Hope to see you on Monday during the last hour, and we'll do this all again. So take care, everyone.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.